Hello, folks. Welcome to another edition of Market Action. Dave Russell here. On our strategy note this morning, we put a little green zone where we thought would be the right place to be buying. It was essentially, we're about 2 points too high on the bottom. We said 22.04 would be the place to be buying the futures, and we bottomed today. Let's see, 20. I think it was 3 points lower than. But basically, we were looking for this zone as the buying zone. It's pretty much what panned out here. And I think it's important to realize that this is one of the reasons why we do this strategy. You know, there were many times when I used to short the market in times like this. And there's just times when the market's not going to fall. And I think one of the things to recognize is, in my opinion, one of the things that's allowed me to start making money far more consistently is to recognize times when you can be aggressive and times when you shouldn't be. It's kind of like you have to know when you're at a party and you have to know when you're at a funeral. And right now we're at a party. And you can get away with stuff at a party that you can't get away with at a funeral. And I think that this market, and this is why we do the strategy, and I had the advantage to meet some of you guys in Las Vegas recently. And we go through a lot of these different criteria, things like the technicals, the calendar, the sentiment. All those things still look pretty bullish for the S&P 500. So in this situation, I think we're going to see a steady inching of money into the market into year end. So I think at this point we're probably going to keep inching to the upside. The options paper today is, again, pretty bullish. A few names I want to mention. First of all, WPX Energy. It's one of these domestic shales. These domestic shale names, these guys are basically looking pretty interesting to me. This one had in the money call buying today. Interesting if you look at this stock. After OPEC, it exploded out to a new high here. And wait a second, put a flat line. Broke out to a new 52-week high, and they basically were buying in the money calls today. They bought the January $12.50 calls. Looking for the stock just to move higher. Darden Restaurant, this is one that has, when you get these companies that turn around a business like an Olive Garden, it's not a huge growth business, but if you turn around a few little of the metrics, you move a little margin here, a little comps there, little product mix here and there, and next thing you know, this can really work. And this company was showing some signs of strength. Back here, this earnings report at the beginning of October, and it's just been exploding higher. They're buying the December 80 calls today, looking for that move just to continue. These are inexpensive calls. They were like 15, 20 cents, but when you look at the way that a stock like this can trade into year end, this is the kind of thing that I think can just continue that melt to the upside. When we did the alert, I'm pretty sure the calls were offered at 20 cents, and now they're up. They're just kind of inching higher. So I did want to just mention this name. Starbucks had a lot of paper today. Let's take a look over here in Research Lab at Starbucks, SBUX. If we go to the the options page here, we can see some significant volume in the Feb 60s and the 9th of December, the Friday calls of 57.5 weekly calls expiring this week. Starbucks here, we've said that it's in a range. I think just yesterday we basically said this stock was going between 52 and 63. I think it could easily work its way back up here. If you really look at it, this stock is now holding above that 200-day moving average for the first time really since April. The 20-day, 30-day, 50-day are all rising. That really hasn't been the case before for a while. So when you look at the way the economy is and other things, consumer discretionaries, people are looking for these today. So they're looking for Starbucks just to kind of crank higher, over 2 different time frames. These are different activity. They occurred at different times throughout the morning. There's also call buying in Coors. Michael Coors, another consumer discretionary name. Jan, $52.50 calls were bought in KORS. Very large trade today in JP Morgan. JPM. Let's take a look here. They basically rolled the $72.50 calls to January of 2018 in JPM. There was another trade here that I wanted to find that I did mix. There was something in XLF I wanted to mention. Let me find that real quick. But in terms of JP Morgan, we can see right here, looking at the options, we can see over 12,000 contracts. So they sold these 75 expiring next month, rolled them out for a whole year These are pretty expensive options. Just kind of riding these in the money calls. So this is kind of interesting. They're going actually, to a lower premium. Also, I want to mention this one. I want to add this. The XLF has a collar trade. They in the end of year, $23.5. Let me do X. Let me just add this. XLF 30 December. It's pretty significant size. It's a collar. This is someone who's just basically, probably looking to take a look here in XLF. Just looking to hedge, which has been an amazing run in the banks. I would tend to think that when, at the end of the quarter, these banks will keep inching higher and the financials will keep moving higher. But, in the quarter ends, don't expect it to continue, I think. This is something, it'll probably have more continuation later next year, but I would tend to think in the first quarter, people are going to take a lot of profits in this. Take a look here in the options on the XLF. You can see these calls, 30,000 of those calls on XLF, 30,000 of the puts. So someone is just hedging to 22, 23 and a half at the quarterly options that expire on the end of the year, 30th of December. RSX has call buying too. Russia has been the best ETF or the best country recently, and we're seeing the RSX January of 2018, $19 calls bought. Those are in the money in RSX. If we look today, though, I want to mention in the international picture, we're actually seeing a value hunt on the global picture. It is interesting because yesterday we did some call buying in Deutsche Bank, and now today all these these European, Turkey is essentially a high beta version of Europe, but Italy, Spain, Brazil, Mexico. These are all these countries that have been like some of these international, partially scared of Trump, partially weak, strong dollar, whatever. But the key thing is I think we're seeing a bona fide turn in Europe at this point. Look at Deutsche Bank. This is a big deal. Look at Credit Suisse. This is big. And I think this is going to continue. I think a name like Credit Suisse could just keep going for a long time. Here's another name that I've been watching, and it has not worked, but CVG, this company manages office buildings around the world, but it really tracks Europe, and I'm not entirely sure why. They obviously manage a lot of buildings in Europe, but there's another kind of European-themed company. I think we're seeing a bona fide turn. Look at the VGK, which is a European ETF. Also coming off this low at 46. Excuse me. I think that we're seeing this turn in Europe. I think that once the Italian thing is passed, we have the ECB coming up on Thursday. Draghi's probably going to say, we plan to keep QE, but he's probably going to give it some kind of twist in a way that makes people bullish. And I think when you look at the prospect of European QE going away, just think of Deutsche Bank, think of these European banks. If we have a steepening yield curve in Europe and we have the idea of quantitative easing going away, these companies have more upside. I know they've run, but I think it's going to be something we're going to see. And so it's interesting to see that. Look at Santander. All these names are looking just very interesting, like they're showing real signs of, look at this 200-day moving average on SAN. All of these names. So I just think this is something here. This is a big move. This is like the metals 3 to 4 months ago when they just started cranking. I think this is something that could continue. So I think, let's look at this because there's a lot of companies here. Look over here in Research Lab. We look at our best groups on Research Lab. European lenders right at the top of the list. So that's kind of interesting to me. Also, Toll Brothers had good earnings, and these home builders are up today, and I think at this point, people are starting to take these home builders seriously, and I think that's going to be another thing that we're going to see, something of a turn in some of these. The ITB is looking pretty nice here, the way it bounced that 50-day moving average. I think this is pretty interesting as well. Just looking at it's a huge strength, a huge mix of strength today. There's just things all over the place that are bullish. Ocean drillers, wildcat oil companies, the staffing companies, which are also economically exposed, staffing and human resources, temp firms, these are strong today. So I just think it's interesting that we're seeing a lot of broad strength. Take a look at some of your questions. Where do I see HPQ going? HPQ. Excuse me. I'm not sure. I mean, it looks like it's pretty much a bullish chart. Um, the one that I have been watching is it looks like it's breaking out as HPE, Hewlett Packard Enterprise. This one looks like it's kind of on the verge of a breakout. I'm not really sure about HPQ. I've been a little bit confused in exactly the moving pieces. When these companies do spin-offs, sometimes they get a little bit confusing, and I haven't really studied them closely because tech has not really been the place to be. CLF, I'm holding the Jan 11 calls. Well, I think those will keep moving higher. I think you're going to see window dressing in the metals into year end. So I think these are in good shape. By the way, I continue Dow Chemical and Westlake today. I think both had good buys. I put it on Twitter actually. I haven't used Twitter for a long time, but I do have a Twitter account. It's been up here on Market Action for years, and I almost never post to it. But today I did. I'm going to start trying to use it a little bit more because it's not always possible to communicate with you guys on time. And sometimes, like Westlake, we were saying, hey, when it was down at 56, that was nice. When Dow Chemical was down at 55.5, that was nice. I think that these chemical names, and they're not so great today, but these are when the stocks are when they go to these 52-week highs and they just kind of push and push, they don't pull back much, and then you come in the next day and they're just higher. So I think that these chemical names today, they're not where the strength is today, but we're not just looking for today. We're looking for 2, 3, 4 days out, and so that's what I wanted to mention in the chemicals. Netflix also, this company basically, look, there was a time when I hated this company because I really didn't believe that they were going to be, I'm not an expert in, new media, but when I saw the evidence, I have to change my opinion. Like I said, I look at companies and I don't care if someone says, hey, I've got a great idea. I have to see the numbers and the stock price and the income statement back it up. We've seen that in Netflix. I've been bullish on it, basically since this good earnings report in October. We did the Advantage Point trade when it was coming off that 112 level, which we actually identified when the stock was up, closer to 130. This name is not a joke. This company is going to keep going, I think. This is the best in breed of these, FANG stocks or these big, NASDAQ names. This is a bona fide story. And I think that some of these others, like, this thing with now they have this information showing that their app is gaining market share. I just think this is one of these companies that, like, it's like an Under Armour or like a Nike, not even like a Nike. It's like a Starbucks or a Lululemon. When it works, it's awesome. When it's bad, it's bad. But right now, you're looking at a company that has a distinct brand. They're gaining market share. They have a niche. People are willing to pay for this, and they have a business model that's working. This is a bona fide growth story, and it seems like, it's not done yet. So I think this company is. I think it's going over 130 by year end, and I just want to mention that because, I think this name, we just keep seeing evidence that Netflix is for real. Here's a company that I run some scans and I look at, let's look at these companies that are getting active. Matador Resources, this company's had just growing call volume, or growing option volume for several months, or for several weeks, I should say. They're doing a secondary stock offering. But, this chart, this is basically one of these domestic shale companies as well. This chart's pretty bullish. Doesn't look that different from WPX. So this company's doing its offering. Excuse me. I'm not saying you're just to buy it, but I think this is going to be one when they get done with that offering. This looks like a pretty good level to me. So I just think it's something that, this is one we want to take a look at. Kind of snoop around a little bit, but I would not be surprised if it is a company when they get done with that offering, it just takes off. This company really did not drop that much compared to others if we look at like a 10-year chart on the Options House platform. This is not that far away from the all-time highs. I think this is probably a pretty good stock, and I would just the chart will tell you a lot. And I think when you consider the fact that oil was over $100 back in July, oil is half of that now, and the stock is almost in the same place. There's something bullish about this stock, I think. And I think just when you look at the chart will tell you a lot about fundamentals. So there's something good here. So I just want to point that out. Here's another global stock that it looks like the European banks. And Again, I'm not super sure about what's happening with India here, but this is a big Indian. This is like Bank of America for India, and the look at that 200-day moving average turning on ICICI Bank. This one came up because I looked for stocks I think that had like the 200-day moving average had recently turned. We did a scan on Research Lab saying show me companies that have a 200-day moving average streak that is greater than 1 but less than something like 50. And that would mean that the 200-day moving average has been rising for 1 to 50 days, which would basically mean that would show stocks that had been falling that have been turning higher. So I did some kind of scan like that, and this stock came up. And I just want to point this one out as well. I also want to keep on our radar Citrix, because this stock I think this is poised for a breakout. It might go back down to like 85, 84 and a half something. It might, but I think this name has been very strong. It's in a bad sector, but we've seen this chart, this candle. We have seen this candle on about 1 million stocks, and they've all gone up. And the candle I'm talking about is it tries a gap higher ahead of good earnings report, and it gets ahead of itself, and they smear it lower. And then 2 to 3 months lower, it takes out that candle and it just takes off. We've seen this in many stocks, and I've cited T-Mobile as an example various times. It did that back here. That was how this run began in T-Mobile, with one of these candles. And there's a lot of other stocks that have done this. Alta Salon is another one that did it. It gapped up and they smeared it lower, but it held. And these candles have been temporary impediments followed by upside, and I think it's interesting to see that on Citrix, to see the stock just pushing against these highs, bullish ascending triangle, holding up well in a sector that's been weak. This could be one that breaks out, and when sentiment shifts a little, people come back to tech, which will happen. It will happen. I'm not hating tech forever. This stock, I think, is setting up. So anyway, I pointed this one out yesterday. I just want to keep it on our radar. I probably will not mention it again. Paycom is a long-term growth name that, we said this one before, that is one that we can probably have an opportunity to get into this one. About a week or two ago, I know I mentioned this one. It's been chopping around here. This stock might chop back down. Paycom Software. This is a monster growth name. It's a mid-cap stock that doesn't get a lot of attention, doesn't trade a lot of options, but it's just a monster long-term growth name, and it's in the middle of its growth cycle. This is the kind of thing the guys at investors.com like, Jim O'Neill. This is a classic Jim O'Neill stock, as a cup and handle continuation pattern. Long-term, this name is probably going to be pretty good, and I do like Paycom, even though it's not super great for the liquidity of the options. Take a look at more of your questions. KSU. I don't know about this one. With the Mexico thing and everything else, and like the political stuff, I'm just not sure about this stock. I think here's my view of it. I think you want to see a sign that the momentum turns. And in that case, you want to see the 20-day go through the 30-day, or the stock consolidate above the 50-day. I don't think it's going to rally soon. Too much Mexican exposure, and I think that's just an issue. Speaking of the political stuff, there was a report, and I don't know why why the Washington Post chose to unearth this today, but they basically said that there was $250 billion of wasted spending at the Pentagon. Now, I'm not really sure that's news, but apparently someone in the government suppressed the report. And, whatever. But the key thing is, and this is the reason I haven't been big fans of these defense contractors. These guys are like, there's a lot of crony capitalism, and there's a lot of these companies, like here's one that I've been watching and I can't figure out, but CSRA, these are like IT companies for the government. There's a lot of these weird companies, but my point is just that who knows what exactly these companies are up to. But, you see Trump today going after Boeing. I actually think Boeing is pretty is pretty bullish, and I said that I thought it was going to break out. But I think that a lot of these companies are the government contractor stuff. This is what I'm a little bit wary of with some of these defense contractors. There's just a lot of weird stuff in these companies, and I feel like they've been tied to the politicians in strange ways. And that's all I'm saying. I'm not trying to say that, like, defense contractors are evil or something, but these guys have basically, they have found ways to make money for a long time with connections and stuff like that. And this is a new regime. This is a completely new situation we're facing politically. So I'd be wary of all of these companies. I just wanted to point that out because I do think that we're seeing where there's smoke, there's fire. So I was probably a little bit early on it, but I do think it's when we have to be careful of companies that have government contract connections, and that includes certain IT companies. Also, an interesting note, the OECD, the Organization of Economic Cooperation and Development, the club of the rich countries in the world, they said inflation in big economies is at a 2-year high. Now, I would say, I think when you look at the overall shift in things like interest rates, you look at jobs numbers, you look at what's happening in Europe, you look at what's happening in oil, you look at what is probably going to happen in the United States with infrastructure spending and other sorts of pro-growth measures, I would tend to say that this is not a peak in inflation. This is just the beginning. So I think that's what the market would see as well. But it seems to me that we are getting increasing confirmation that things are pointing toward a stronger economy. Just before the webinar started, the Energy Information Agency raised its oil forecast for this year and next year, citing stronger demand. Today we had good German factory orders, good November construction numbers from Germany. So all these things I think continue to point to just incremental improvement, and I think that we haven't fully priced it in yet. It seems like it's still working. Chesapeake. I bought Chesapeake calls yesterday based on my own recommendation, and I'm long them, and I think Chesapeake, I think I bought the February calls or something. I think I bought the Feb 8s. I bought the Feb 9 calls in Chesapeake. Now, this is not my account, so I'm hiding my account. But I bought these calls, I think, for like 35 cents, and I'm up a little bit on them now. But I said yesterday buy them for 38 cents. I think Chesapeake here, look, natural gas has been pretty decent. I think when you consider the fact that we're just getting into the winter and everything else, and we're going to have natural gas exports. I'm not an expert in natural gas. I find it a very confusing commodity. But I do think Chesapeake now, there's just been a lot of companies that have come back from the dead here, and I think Chesapeake fits that bill. I still like it. So for me, I think the way to play it are those out-of-the-money calls because, this could do nothing for like a month and then nothing, you're frustrated, but it could also just rip higher. So I like the stock. I like the name, and I think it's going to probably accelerate higher. So I'm long the calls in this right now, and I'm looking for it to accelerate. What would you expect? Exelix? Will Exelixis continue its run next year? I mean, this has been an amazing name. Yeah, I think so. I mean, this company has something incredibly bullish with their oncology stuff. I think so. I mean, this would probably go to 100 or something outrageous. We've seen this with these biotech stocks before, so this is probably one that's just going to keep going straight up. But you have to look at it. Is there drug data coming up? Are there trials? Are we waiting on any key information? My cheat sheet to do that is always go to the options house, implied volatility constellation. I don't see any clear evidence. Usually when there's a clear event coming up, you're going to see a very high premium on that month. So in this case, I tend to think that this company might not have anything super clear, but I would still say you want to look at it. I'm holding the January 40 calls in Rio Tinto. Let's see, Rio. I'm long BHP, which in many ways is like Rio's cousin. 1 second. Okay. I think Rio, those 40 calls make sense to me. I think it's going to break out. I was actually citing on our chat this morning that I thought BHP was attractive down when it was under 37, or maybe not 37. It was down. I remember I mentioned it earlier on our chat, on our premium chat, shortly after the opening bell. I think both of these stocks are just in the middle of their runs, and I think that those Jan calls make a lot of sense. Materials, chemicals, metals, weak today, but very strong over the longer run, especially the metals. So I think that this is just going to continue higher. Where do I see TLT going with the Fed probably raising rates next week? Well, I mean, to me, I would say I would almost think that the thing is with the Fed coming up, I'm going to just say that ECB, I would also put more of a focus on the ECB on Thursday, because if the ECB says no more QE, it's going to really allow the Fed, you're going to see like Loretta Mester and like Esther George stage a coup against Janet Yellen. So, I mean, that's something that we're going to see, and I think that, kind of exaggerating, but the point is that there's clearly hawkish forces growing in the United States. And if the ECB gives them the green light to that, that's going to be something that I think we're going to see. That I think is going to be more important than the Fed, and then obviously the Fed statement. So where is TLT going? I'm not sure about TLT, but in our strategy note, we have this section at the bottom called long-term view, and we basically have been saying that we thought bond yields, where is it? We expect TYX will go to the peaks of mid-15. Now, if you don't know TYX, it's an index of the 30-year yield. So in my opinion, if you really want to chart stuff over the long term, you have to use the yield on bonds, not the price of an ETF. Near-term TLT level works, but not longer term. So I think right here, this high from July of 2015, that's where you want to look. When TYX goes up to that level, TLT will stop falling. And I think that, that may or may not match a level on TLT. TLT pays dividends and stuff, I think. So, it's not going to be precise. But TLT is, I think, not finished going lower. I don't see much evidence of that yet. It has a weekly engulfing candle today, if you look on the weekly chart. But I don't see much to really hang your hat on yet. I don't know if you want to be short TLT. I think it makes far more sense to be long Deutsche Bank, to be long Credit Suisse at this point in time than to be short the bonds. But I would tend to think here that that it's way too early to buy bonds. It's way too early to buy real estate investment trusts. It's way too early to buy utilities. That would be my answer to your question. MAR, Marriott. I think it looks to me like it's going to go back to that high from about 2 years ago. There you go. Looks like it's got about another 4 points up. So I'd say it goes back up toward 85. I think that's a pretty likely bet. So, okay. What about JetBlue, the Jan 22 calls, and JBLU? I'll be honest, I'm not a believer in the airlines right here. I don't like the way these charts have been behaving. They look like they're kind of topping out to me here. So this could move a little bit higher here, but I sold my Hawaiian Airlines. It worked very well for me, and it chopped a little bit higher, but I am wary of things like oil, and also the fact that let's take a look here at this one. This is a level here on JetBlue from mid-April. Come here. It could just stab higher. I look at this ETF sum. It barely trades, but it does actually encompass all the companies. I think these guys have run really hard, and I think there's other places to look. So I'm not a fan. I think right now the airlines have just run a lot, and I think this stock could break out and stab a little bit higher. but I'm not a big fan of the airlines right now, especially with oil, allegedly on the verge of continuing higher. This could really be the time when oil really does turn. When we actually added, it's probably funny. It'll probably be like, Murphy's Law. Today we added a long-term section to our long-term note saying that oil is forming a triangle. Let's take a look at this. It's essentially this channel, but it's actually become a little bit more of a triangle than a channel. So if we look here, let's make this into like a channel, a triangle. I think we can see here in the crude oil futures, let's see, maybe this is the time it breaks out. We're going to have API oil inventories tonight. I think that's a little bit of a problem potentially for the airline stocks. So I just think right now that the easy money's been made in the airlines, and it's a little bit just a gamble at this point. XLE and XOP. Again, I'm not super clear on the energy and the oil. I think that the names to play are these domestic names, like I've been saying, MTDR, things like these, things like, what do you call it, WPX. I'm not sure we're going to just see continued upside in XLE per se. Yeah, it probably will. I think, as I look at it, it's probably just going to keep grinding higher. I'm not sure exactly the right way to play it, though, because when things are up like this, what happens if we have a bad API number tonight and a bad EIA number tomorrow? There's a lot of people who think that the Saudis are going to cheat and stuff like that. You could just get, kind of swiped lower. So I'm not really sure what to do with these per se. I like them when they slam down to some kind of good support. What is Amazon and Facebook? Thinking of never trading these again. I'm getting a whiplash. Well, I think that we were pretty cautious on these names about a month ago. We said that we thought they were overpriced, old, tired stories. I think there's a little bit of a potential for a move higher in these names, but I'll tell you, I don't like either of them. They're very expensive, and I'm not sure that their businesses are really that good. I think that the problem with Amazon is I think that they have growing competition. At the very time that they were supposed to start reaping rewards on the margins, now they have Walmart and other people attacking them. They're going into some grocery stores. I don't know. I mean, this company is just like, it almost seems like it's, like when they used to make fun of Google for going into like driverless cars. So I think this is just a little bit, I don't see a clear story in Amazon, and I don't see a clear story in Facebook. Both of these now I think are just too expensive. And there's so many better, clearer stories. I think Netflix, I mean, to be honest, why do you want to mess with a company like Facebook whose ad growth is slowing? The best days of Facebook are probably in the past. Virtual reality sounds nice, but I don't see how. I mean, most people I know who use Facebook, I mean, I don't think that virtual reality video games is the same, vertical. I think that this is just a company that they did a great job, but I'm not sure that they really have that clear growth the way it was before. So I think this is one that I still think is going under 110. I think Netflix is the name that we want to be in. I think the semiconductors are the names that we want to be in. Today, for example, KLA 10 core, nice pullback on this one. I think this one, if you look at NVIDIA, it's just, I mean, this looks like NVIDIA did a little while ago, and now it's just exploding higher. We cited NVIDIA, earlier in the week. Things like Amcor, these have been strong. And the other one that I like, this had good earnings, not as liquid or well-known of a name, but Rambus. It's had some good earnings here. It looks like it's getting its act together. Just had a 50-day moving average go through the 200-day. This is a good one as well. So I think Rambus and KLA 10 core, you want tech, avoid the big IT intellectual property names. Look for the device makers. Look for those companies that are going to be more cyclical economic activity. That's what I think. AMD broke a 52-week high. This thing is just unstoppable. we were saying this, like a month or two ago that we saw this continuing in AMD. But at this point, this is just I think it's gonna end the year over 10. So for me, you want to look for inexpensive out of the money calls, something like the 30th of December $10 call, something like that. I think is the way to play it. Something like this or a vertical. I mean, this vertical spread is the 9.5, 30. I mean, that's like that's a 50-cent spread going for. It's not that attractive, but I think this one name is going to just end the year. It's going to just go straight up into year end. What do I think about? All right, Borg Warner, BWA. The auto-related stuff's been strong. I'm long Ford Motors. Wow, this one's nice. I think everything related to autos now. I mean, the thing is, we've seen that now these companies are weird because, you would think they're industrials, but some of them are in the XLY, and some of them are in the XLI. They're industrials and they're consumer discretionaries. Autos in general are consumer discretionaries, not industrials. I think this is going to be one that's going to have shallow pullbacks and then it explode higher. Look at how nicely this chopped around here at this level. So I think this is pretty bullish. I like this name. It looks good to me. I'm not sure. I think if you look at it, this is going to be one now where it's going to have another good pullback, I think. It's going to have a good pullback. Maybe not right away, but it's going to come back down to these highs around 37 and a half, maybe 36 and a half. Okay. It's going to come back down at least. You know what? It might only pull back to this 37. Let's call it 37.40 on this name. What do I think about WIN, W-Y? The casinos and consumer discretionaries have been pretty strong. I would say this one goes back toward 110. I think it's in a pretty clear channel here, but I think 110 is the top of that channel. So probably has some good options to get you there. BABA, is it going to 85, 86? Yeah, well, we've been saying that BABA is going to 85. I do agree with that. This is the level we've been watching on BABA. Yeah, I think so. I got to say, I've said it before, but I do think that China now is not looking good. I really do think that you're looking at a country that, they already said, hey, we're going to cut a ton of, not a ton, but many millions or hundreds of thousands of tons of steel production. And they're going to face Trump going after them on trade. I think China is headed toward what could be something not very fun economically. So I think I don't think it makes any sense to be looking for anything China-oriented. I don't really care if it's how good of a company it is. I think that people are, maybe some of the individual names like really weird names like ACH, which is an aluminum company, but it doesn't trade very much. I think, though, that China has got some problems coming their way. So I would avoid Alibaba. Procter & Gamble, PG. Consumer discretionaries are really not the right place to be right now. This is trying to hold a level, but it also has a level under 80. So I don't see any reason to mess around with this one. It hasn't given any really clear confirmation that it's bottomed. This could easily go down to 79, in my opinion. So I would avoid PG. What do you think about OPCO, OPK? This company, oh my God. I mean, this is it's bullish, but my God, this company has been so volatile and unpredictable. I mean, it looks like it's finally continuing higher. It had a long consolidation period around 10 here. This big run, but this is bullish. I think this one is going to probably break out and move higher, but I've gotten snapped around in this name many times. I would tend to think that let it break that level from March. That I think will at least save you a lot of gray hair because it could go right back down to 9. So let it break 12 or this level, which is 1180. Xilinx, well, Xilinx, we have calls in. I've been saying I think Xilinx on the verge of a breakout, and I continue to think that. I like Xilinx. I think it's just going to quietly slide through 55, and next thing you know, it's going to be, at a new 52-week high. I like Xilinx here. It's been on my breakout list for a while. We have calls in it from not that long ago. Take a look over actually and take a look on our activity log. We did an alert. The Jan $57.50 calls in Xilinx back on the 28th. Do I think XLV will play catch up into year end? No, I don't. I think if anything, you're more likely to see weakness continue, if not worsen, in the sectors. I think you're going to look for whatever they're doing, they're going to do more of it, which means financials will get ridiculous to the upside, metals will get ridiculous to the upside, and healthcare will get ridiculous to the downside. And then when the year changes, we're going to flip, and we're going to look to be buying the biotechs and a lot of these healthcares. But for now, for the next 3 or 4 weeks, I think you got to let that window dressing effect take hold. Barclays, I mean, this is the next feeding frenzy. Why do you want to buy XLV when you can buy Barclays that is probably trading for like well below book value? I'm not sure about Barclays. I do know that Deutsche Bank is under book value. I don't have time to pull it up right now, but I would tend to think that a name like BCS. Actually, you know what? I can do it really, really fast. I'm looking at the computer here. BCS is trading at 0.8 book value according to Yahoo Finance. So yeah, all these names I think are going to continue higher. IPG, there's some kind of investigation in Interpublic. This has been strong, but I don't know. I found this company very confusing. I would tend to think it's going to be bullish. I mean, the Department of Justice investigating an advertising firm. I don't know. I mean, when you have a support level, this name has been strong. I don't know what you're referring to. I haven't read the article, but I think right here, this 23 level, this is bullish to me, I think. Zio, should we hold on? Let me see. It says Zio. This is a fiber optic stock. I think it's still in good shape. I think this has been a good area. Target, this one maybe hasn't worked out. We did have an alert on this. This hasn't done anything bad yet. I think that maybe our alert was early, but it seems to me like this is still intact for move higher. So, we have to do the alerts when they hit, but when the paper hits. But I think there's nothing yet that's gone wrong with this chart. What about Home Depot? We have an alert in this one as well. This looks like it's going to just break out through 130. Let's take a look here at Home Depot. The Feb 140 calls were bought. We did that alert back on the 30th. Just kind of hanging in there. No, I think it's going to break out and continue higher here. This looks pretty good to me. I think when you consider the economic backdrop and the overall sentiment backdrop, it had good earnings last time around. I think Home Depot will be in good shape. Is AMAT dead for the week? I got to say, this one has been frustrating to me. I bought it when it was just over 30, so I'm happy about that. And then it just fell asleep at the 10-day moving average. I'm really close to dumping it, but I got to say, when I look at the other ones, I have actually, sold stocks like this before and then just basically regretted it because they rip higher. 3-day chart here. I think this is just a slower moving chart, and this rally on Friday was so bullish and so strong. AMAT does not often move 4% in a day. So I think AMAT is still okay here. This isn't NVIDIA. It's not AMD. This is kind of like, a slow moving name, AMAT, compared to those others. But it still looks bullish to me. The 100-hour moving average is here. I think it's going to continue higher, and I continue to hold AMAT. Deutsche Bank. Well, I'll just say it again. Deutsche Bank is going to keep going up, I think, for a while. Let's just take one last look over here on Deutsche Bank because on my alert I outlined a bullish scenario for Deutsche Bank. This was my alert yesterday. At the time we were looking at these calls, the January of 2018 $27 calls, which were almost a double on the stock at the time. Those calls are doing okay today though. And there's a reason why we said, something like this you want out of the money, lower delta, lots of time, and then just walk away and then come back and hopefully something works nicely for you. We said a few things. The Italian referendum, bad news is priced in. The ECB, I still think that whatever the comment is, and I'm not sure what Draghi is going to exactly say, but the thing is, I think that we're going to see something moving away from QE in some way, shape, or form. And he might just say like, QE is going to last, or it's one of these central bank things. But I think the key thing is that there is a sense now that the euro has turned and sentiment in Europe is getting better. Look at the FXE. I think this is a pretty major shift. So I think that we're going to see something in terms of a less dovish stance from the ECB. And then the euro dollar, which you can see here at the FXE. You can also see, this is cool. I don't look at this as much as I should, but I think it's 6E. This is the euro futures on the euro. Look at this bullish engulfing candle here on the euro futures. This is actually the euro currency against the U.S. dollar. I think you have a clear channel on this, and you have a bullish engulfing candle on a daily chart. There's a good chance I think the euro moves higher, and if it does, well, that's good for Deutsche. So I think rising interest rates in Europe, steeper yield curve, decent economy, shift in sentiment, all those things under book value, I think Deutsche Bank is going to be lifted by that. Why are out-of-the-money cheap calls so good to use? I don't quite get that. Lottery tickets? Well, to a certain extent, yes. Another thing about them is they can be, what happens is because of gamma, as the stock moves in your direction, your delta increases. So you might buy something for 15, 20 cents with like 10 delta, but as the stock moves higher, suddenly you're at 50, 60, 70 delta. And we had Bank of America calls a while back that were insane. They went up like, let's see, we had some calls here that were inexpensive. Where were they? Let's show trade alerts only, BAC. All right, these calls, no, they were inexpensive. Maybe it was an XLF. But we had calls like these, like 23 cents for 18. So if you look back on October 19th, the Jan 18th, yeah, let's see, Bank of America. I'm pretty sure at that point Bank of America was under 18. So on October 19th, right about there, they bought the calls for like 23 cents. So those calls at the time, the delta on them was, relatively low, but they had gamma. So as the stock cranked higher, the delta increases. And so the thing is like the leverage exponentially gets greater as the stock moves higher. That's the reason why the inexpensive calls can be good, because they get better. And then if the stock falls, you have limited risk. So if you think a stock like Deutsche Bank, I would say here it's the right strategy. 6, 8, 12 months out, with 10 delta, that would be the way to play Credit Suisse. That would be the way to play Deutsche Bank, that would be the way to play HSBC. Because if they move up, you're not going to have a lot of delta decay, because delta decreases as your time value shortens, right? So when you have less time value, the delta is going to diminish. So you want a lot of time value, so you keep that delta and you keep that gamma. And then when the stock moves higher, the gamma will increase your delta, and a dollar move in the stock is more profitable after. As it goes higher, the leverage increases. So that's the reason why the inexpensive calls can be really, really lucrative. There's one other example. We had an ExxonMobil alert. I remember a while back, it was exactly that. It was like really inexpensive, 15 cents in March for the July 95 calls in XOM. So look at from March XOM to July. They bought those calls for 15 cents in March. All right, and that stock, by July, the stock went to 95. And those calls went up, I think, like 1,000%. And the reason is because, that was what we had. You had that gamma kicking in. So anyway, I got to jump. Hope everyone has a great and profitable end of the trading day. I think my Advantage Point trade for tomorrow or tonight is going to be Dow Chemical, which I own calls in myself. I like the chemicals here. This one might be one that I will be targeting. I want to let you guys know that. One other one to watch. Great stock, bad sector, but maybe we're going to get CCI. Let's get a retest of 80 in this stock. Awesome name. Bad sector, but if it gets back in there at 80, this could be one that hits 80 on New Year's Eve or something, and then the first 3 months of next year it just goes right back to 100. So that's what I'm planning to do. I'm looking for a retest under 80 in CCI. Hope everyone has a great day. We'll be back tomorrow. Don't forget API inventories after the close tonight. Take care, folks.